So yep, so we are online. This is Mary Vandenack Weaver, and with me today are Jim Piper and Mike Weaver, and we're going to talk today about the various ways of responding to the COVID-19 language. We have the COVID-19 legislation. We have, as you can guess, been inundated with questions, and so we've tried to build some of those questions into our presentation today, and we'll cover those as we go. And feel free to use the questions on your screen. If we don't have time to get to everything today, then we will respond to those questions. We have a COVID on our website. We have a COVID page. You can just go to vwattys.com, and on that website, that we have a page. And to the extent we have questions, everybody's asking similar questions, businesses are impacted differently, we're going to continue to post information there as quickly as we can. So I'm going to ask Jim Piper just to start, and Jim, I'm going to just pop in and ask some of the questions in a limited amount of time to connect before our webinar. So I'm going to stop and ask questions based on what I've been getting asked, and Mike's going to do the same thing. So rather than just running through, we're going to try and answer some of the specific questions that we're getting. So, but I'm going to let you just start to explain, and we've had a variety of legislation, and the correct way for any employer to respond depends on a couple of things. Have you been shut down? Have you been impacted? Or maybe you're one of the lucky ones who is super busy right now, but you're worried about your employees. And so those are kind of the categories that we're covering. So Jim, do you want to go ahead and just start?
Sure, yeah. I listened to a presentation last night from the U.S.
So Jim, I'm just going to warn you that you're cracking up a little bit, so you're going to make sure that your connection is solid, and so if you have a little ability to move. We are, by the way, all doing this remotely for the most part.
I'll come through if I can.
Yeah, so you're still cracking up. Mike, do you want to try jumping in? Mike, do I have you?
Yep, I'm here, sorry.
Yeah, do you think you could jump in while Jim figures out how to fix his internet connection and just kind of start about the different ways and the various options that we have for employers?
Sure, so there's basically the economic impact disaster loans, and then there's the paycheck protection plan, the so-called forgivable loans, the PPPs.
So wait, I want to back up and ask the bigger question. So like Jim's comment is that you have kind of this dividing line between employers that are over 500 and employees that are less than 500, right? And the options available are different. So in a quick scan of our participants, most of our participants are under 500, so we'll focus there, but we do have a couple people online with over 500. So I do want to make sure we're pointing out what is available to those employers. I'm just going to check back in with Jim and see if his audio and video is any better. All right, so I'm not hearing him. So Mike, you and I are going to have to go with this. And so we've all been working on different parts of the legislation. And so again, Jim's kind of really been our expert on this area, but his audio and video is a little bit challenged. What we're seeing happening going on for the audio and video is a real problem. I'd ask any other participants because we're getting some feedback from the participant. Anyway, so Mike, do you want to just jump into the first loan that's already currently available is the disaster loan?
Correct. So if you were already in an affected area that was declared a disaster area, you may have already applied for one.
Which is now the entire United States.
Correct. Now it's the entire United States. So anybody, as long as you had a business and you had employees, you can apply for one of these SBA loans.
And what does the word have employees mean for this purpose?
you have, just employees that you are paying wages to under the typical definition of wages for purposes of the code. So anytime you're hiring people, you're paying employees, then you're going to be eligible.
What about a 1099 employee? So there's like my occasional person that I call and bring in for some reason because I, need to use them, and the rules require me to issue 1099 to them. Do you get to count anybody you're issuing a 1099 miscellaneous to?
Yes, the answer to that is yes. You get to count those as part of your, you get to count the payments that you're making to independent contractors as part of your monthly payroll for purposes of particularly with the paycheck protection plan, the forgivable loan.
Yeah, so under the disaster loans are generally, what we're seeing is that people are getting 6 months of expenses. And because those are available now, to the extent you're eligible, we're saying apply for those. If you've been shut down or revenue substantially dropped off, you can also get this $10,000 tax-free grant, which is supposed to come through within 3 days from your application. So the paycheck loan being a separate thing, that's going to basically, you can apply for 2.5 times, your average monthly payroll, right? And so
capped at 10 million,
in terms
right?
of what counts as expenses under the disaster loan or for paycheck protection, which there's some overlap. I mean, our general approach for a lot of clients is, one, apply for the disaster loan. It's available now. If you're eligible for the emergency grant because you've been impacted, apply for that, get that 10,000 in the door. The disaster loans are generally covering up to 6 months of expenses, including everything. You may be able then to get a paycheck loan when that's available end of the week if you don't need all the funds under the hardship loan, which again, you get 6 months of funds versus just 2 months under the paycheck loan. That's kind of the general process we're suggesting for most business clients. There are some unique variations of that depending on type of business. I'm just gonna again check in with Jim. Can we see Jim if we can hear you at this point?
Yes, I'm on by phone now. Is that better?
Oh, that's way better. So you go ahead because this has really been your area and I just want to make sure you elaborate on that.
Okay, the first thing I want to point out on the disaster loan, there's a new website for that, which has a streamlined application process, and we didn't get that into the PowerPoint, but it is
So what is that website? And we'll post that. It will be on at vwattys.com. If you go to our main page, you can click immediately to the COVID and we'll make sure this is there. But let's go ahead and give our listeners what that website is.
Okay, it's COVID-19 relief.sba.gov.
Okay.
And I just went there.
Go ahead.
I just went there this morning and did a dummy application as if I were a sole proprietor. And it is very streamlined. It just asks for some very basic business information and then you submit. And we'll have to see what happens after that, how responsive they are, considering there's going to be a giant crush. But their intent is to be responsive within the timeframes in the bill. So.
Okay, so I'm just going to back up. We kind of gave our general process that we're suggesting for most employers, which obviously varies a little bit on, if you're over 500, under 500, have you been shut down? Are you partially impacted? Those are all different scenarios. And so what we're doing, we wanted to get this information out via this webinar to as many people as possible, but we are doing like flat fee COVID consults. So you can call us and say, here's my situation, but we're trying to arm you with enough information to make that call really efficient for you so that we can direct you based on your specific business type as exactly your situation. So, but there's kind of a scenario is apply for the disaster loan. If you're eligible for the grant, get the grant. So I want to just back up, Jim, and say, who can get the disaster loan. That's the starting point before we jump to the paycheck loan,
Right.
which is currently available.
The
And that's
disaster
the
loan is,
website you've just given. So what employer can apply? If they're up and running, can they apply?
if they were in existence on January 15th, and that includes, in this case, self-employed people and sole proprietors.
So
And it
any
also
business
doesn't,
that existed on January 15th can apply for a disaster loan. Correct?
pretty much, and then nonprofits that are, with the narrow exception of actual like churches, but basically any 501c3 that has economic injury as a result of the outbreak can apply for disaster loan also.
So I just want to back up. Any business that existed as of January 15th, do they have to show hardship? Skip the nonprofit. Does a business have to show that they were impacted? I mean, again, delivery service, can they get the hardship loan? The disaster loan?
The amount of the loan is supposed to be based on the amount of the economic impact that needs to be covered. But
So if I'm making more money than I've ever made because I converted my specialty meat place to making ground beef and toilet paper, I'm not eligible. That's just what I'm getting at, is you have to have been impacted by the disaster and show some loss of revenues to get it, correct?
that's the intent of the 7B2 program, which is what this comes under, is that you have to show that there is an economic loss, that the loan will replace that revenue. Yeah.
Okay, great. And my understanding is that what we're seeing is about 6 months of expenses is what's getting covered. That's been varying and we're getting different information on that. So as we know that more exactly,
Yeah.
but that's sort of the ballpark we're seeing and hearing clients get as they communicate with the SBA. So then
The actual,
go ahead.
the statutory cap is $2 million under that program, but
So the most you can apply for is $2 million.
yes, but yes, I think they'll probably try to be generous in calculating what the the amounts that people can get based on their average revenues and et cetera.
Okay, so can we talk briefly about the emergency grant? So to get, as I understand the emergency grant, one, you have to apply for the hardship loan. So, and I'm sorry, disaster loan. So if you're, and the entire country has qualified as a disaster area for purposes of this loan. So if a business existed on January 15th and has been impacted, and that includes nonprofit, self-employed, and gig workers, at this point, they can apply for a disaster loan with a max of $2 million is the cap on the loans. The calculations are being generous. In addition, there's a $10,000 tax-free grant from the government that can be obtained supposedly within 3 days if you have serious impact. So what's the showing required for that, Jim, to get the grant? You have to apply for the disaster loan, but as part of that disaster application, you can request the $10,000 tax-free grant. Do you need to make a particular showing?
No, I just went through the application and it's basically you just check the box. It says,
you check the box and say, I need 10 grand now.
that's the way it's set up. Now, what will happen after you hit submit, I'm not sure, but that's the way the application is set up.
So even if you're online and you want to get this started, you can go right to that website right now, which is www.covidrelief.sba.gov, right? I get that app started and get online as soon as you can. Check the box for the $10,000 tax-free grant, and that amount is tax-free.
COVID-19, there's a 19 in there, COVID-19 relief.
COVID-19, thanks, Jim. And we will have that website posted so you can just click through to it at our website as soon as we're done. So just talk to me about self-employed persons and gig workers and their eligibility to apply. So a self-employed person means I'm a massage therapist and I, generally go around to people's homes and now I'm not.
Right.
That
I mean,
person can
the
apply for it.
disaster loan, yeah, the disaster loan is set up so that that type of a enterprise can apply.
And gig
And
workers,
we're not,
so I'm a gig worker. One day I write social media stuff for law firm one. The next day I write it for some other, but that's what I do. They can apply, correct?
they can apply, yes.
Great.
And they
And-
also can apply for unemployment for the first time ever through unemployment insurance.
They can apply for unemployment as well, correct? And I think, and we aren't going to spend a lot of time on that today, but we do have questions on that. That's more of a little bit of an individual, but yes, you can also apply for the unemployment. I am hearing it's almost impossible to get through to the unemployment at this point, but keep trying.
Sure.
What I found myself with calls is all of a sudden you get the moment when somebody else hung up and you can get through. So just keep logging on and keep applying. If you, you'll eventually get through. Okay, so then we're applying through the website. Any other thoughts on that, Jim?
On the disaster loans,
Yeah, I'm going to stay with the disaster loans for a moment because that's what people can get online and apply for right now, right? So, and these
Correct.
loans, let's just talk about the $10,000 immediate emergency grant is a non-taxable amount you can get by checking the box on filing for the disaster loan. And that's not taxable and it's not going to be, you know, so I've had a few questions on, hey, is this, you know, the taxation is, it's just basically like, here's 10,000, keep things going. The disaster loans do have to be repaid in the long term. They're just deferral. Can you speak to how that works?
yeah, as I understand it, the first 6 months are going to be deferred, and I think you can apply for a longer deferral, and then whatever principal amount is needs to be repaid is there's a 4% interest rate, and then you pay that back over time.
And so the deferral is 6 months from what date, Jim?
From the origination of the loan.
And they can, is there any restrictions on what the expenses, what the loan funds can be used for?
The
Do the
restriction
hardship
is, it's to respond to the economic impact of the disaster.
But at the end
So
of the
you
day,
just have
these
to
loans,
show
you
that
have to,
you
you have
had
to
an economic
repay,
impact.
so you have to repay these loans. You just get a deferral for 6 months. Does interest accrue during that 6 month period?
No, actually, I believe that the government is paying principal, interest, and fees on all SBA loans for 6 months. So if you've already got a loan under the 7A or the 504 programs, you'll have a 6 month deferral with your debt service paid by the government also.
Great. So I'm going to just go, we do have a few questions that have popped up. So the first one is, can you apply for and get both the disaster loan and the paycheck loan? And the answer to that is yes. Can the disaster grant be used to pay debt service? I believe the answer to that is yes. This loan has to be repaid. So you can use the loan funds for whatever expenses that you need. Bottom line is you have a repayment obligation.
That's correct.
Okay, to the extent we're looking at a loss of revenue, how is that calculated? I think the answer, I'm going to let you answer that. Do we know?
Well, the application that I went through this morning was just very streamlined, so I think they just ask you basically what your revenue and expenses and things like that. But I assume they're going to ask for some additional verification of the impact. But based on what Secretary Mnuchin and the other people were talking, they're not going to be super picky about, they're allowing people to self-certify to a lot of things in order to streamline the process.
To get the funds out into the hands. So we think that our litigation people will be busy later, but right now let's get the cash into the hands of people to keep their businesses open. if we have a lot of companies who are structured, so they have a holding company, and we might have an operating entity, and we might have a non-operating entity that owns real estate, or for various other reasons, does the disaster loan include all of those entities, even if we have entities that don't have employees? So we're going to talk
Okay,
about the disaster loan, not the paycheck loan.
yes, and there's unfortunately different rules for different categories. But basically, if the SBA has affiliation rules that govern whether or not different businesses are combined for purposes of whether they qualify as a small business concern. And it's different for certain industries, but basically, if you're under 500 employees, even if the SBA doesn't ordinarily classify you as a small business, you're still going to be qualified for both the disaster loans and the paycheck protection loans. And they've made some special rules for franchises. Basically, each individual location of a franchise, in most cases, is going to be eligible as a separate employer. And the food and hospitality industries, basically each location, each physical location of restaurants and hotels will be treated as a separate employer, able to apply on their own. Otherwise, with those exceptions, the regular SBA affiliation rules will apply to whether or not they would consider you part of a larger enterprise or your own individual small business.
So there's really an option here that's partly industry specific. So generally, if your entities would be related entities for the various other purposes there's a whole bunch of different laws that have sort of different takes on it. But so if you're generally going to be affiliated, you can apply for your whole group, but in certain cases you can apply based on location. And the issue will be which industry you're on and what makes sense for your organization. And I don't think we can cover all those scenarios, but that's the generality. Do you need to qualify that at all, Jim, what I've just said?
No, I think that's correct. And unfortunately, some of the other things like the family leave, there's a different test. But that's just the way it is when you're dealing with Congress and legislation.
So while we were talking, someone in our office very efficiently has already posted the SBA disaster loan website on our webpage. So that is covered. I had a few more questions pop in while we were answering the other questions. So does the disaster loan reduce the paycheck? And what I'm going to do is I'm going to defer answering that until we talk about the paycheck loan. So what I'm going to do, the other questions I've noted, and I'm going to defer those, and I'm going to ask Jim to explain the paycheck loans, because some of the answers to those questions will make a little more sense as we cover that. So can you just talk about, so we have the disaster loan, and one of the questions, and one of the most common questions I got is, can I apply for both? And the answer is absolutely yes. The disaster loan is helping usually with about 6 months of expenses. The paycheck loan, which is the forgivable loan, is based on 2.5 months of average payroll. And can you just go ahead and speak to us a little bit about who is eligible, how you apply, what you can get, and what this covers, Jim?
Sure. The paycheck protection loans are intended to be widely available to basically anyone that has fewer than 500 employees, and certain businesses with more than that if they qualify as a small business under the SBA rules. And as I just mentioned, there's certain special rules for franchises, restaurants and hotels, motels. The intent is to get money out immediately that can be used to continue operations and encourage people to keep employees on payroll and paid. Basically,
in order to shut down, Jim, if you've been ordered to shut your business, can you keep those employees on your payroll?
Well, I mean, each business will be different, but you can get this money that can be used then for 8 weeks of payroll. And if you use it at the end of the 8 weeks, the government will forgive that principal amount that's used for payroll costs, rent, utilities, qualifying utilities, and mortgage interest. Now, you can use the proceeds of the loan for a little bit broader uses, but some of those other uses will not be forgiven. So you can use it for debt service on other obligations that it's not a mortgage. You can use it for some other operating costs, but those costs, if they're not one of those 4 categories of payroll costs, which includes benefits and sick leave and some other things, other than the sick leave that's paid under the other program, but rent, qualifying utilities, and mortgage interest are the ones that will actually be forgiven by the government at the end of the 8 weeks.
So I have a comment from somebody who I think knows a lot here that says they're hearing from bankers that the money from the 2 separate loans cannot be used for the same expenses. What's your thought on that?
Yes, that's correct. And the other thing, you can use the Paycheck Protection to refinance.
Yeah, just wait a minute. I want to follow up on that. So the thing is, though, the Paycheck Protection Act is just giving us two months, basically 2 months of expenses, right? Which is being calculated as 2.5 times payroll, which if you only have 1 employee isn't really going to get you a whole lot. So the thing is, the 6 months of expenses is what you're saying is I can use the paycheck loan to make payroll, but I can't use the disaster loan for payroll then at all?
Well, you can, if you're not using the Paycheck Protection Loan for payroll. I mean, basically you can't borrow for both purposes, but you can. One of the things you're allowed to do is get the disaster loan first and then refinance that through the Paycheck Protection Loan. And that way, if you do use it for payroll, it'll be forgiven at the end of the 8 weeks.
But part of the answer to this is really, if you back up and look at big picture, there's how much can I get under the disaster loan and how much can I get under the paycheck loan? And then how do I use each so that I get the forgiveness under the paycheck loan? And so if we can't use those for the same exact expenses, part of our response to this is going to be, let's talk about your business structure and your expenses. And those, with a heavy payroll, the answer is going to be a little bit different than somebody who doesn't have as heavy a payroll. And what we're really going to do is say, yes, that's correct. You can't use these for the same expenses, but what we can do is say, let's use the paycheck loan for these expenses. Let's use the hardship, the disaster loan for these purposes. Then we're not going to run into that. And again, it will depend in part on exactly what your expenses are. Because you can get a little bit more under the hardship loan, but it has to be, it has to be ultimately repaid. So you do want to take advantage of the paycheck loan to the extent possible. Again, that's going to be individual design. What are your expenses? What do they look like? And let's figure out what's the best option for each employer. And I just want to repeat that what we're doing, we're trying to get general information out today, but we are doing flat fee consults. We're training a group of our attorneys on this so that following this, you can talk to us about this is my specific business and get the answer that's going to be best for you. You might be able to figure it out from this webinar, and my hope is you can, but if not, that's what we're doing to help facilitate after this. So go ahead, Jim.
Okay, so the understanding is, well, first of all, these are loans that will be handled through authorized lenders, which means banks and credit unions and certain other financial institutions.
Jim, I'm just going to back up because I had 3 questions pop up basically the same, is that there's a desire for a better understanding of your comment about using, refinancing part of the hardship disaster loan through the paycheck loan. Can you just clarify that since I have 3 questions on it?
Sure. If you get a disaster loan, they will then allow you to add that principal amount of the disaster loan to your PPP loan and basically refinance it into the PPP loan.
And so one of our
And
So one of our really savvy, knowledgeable commentators on the line, I like the way that they said it. So really what's going to ultimately happen with that is the PPP is going to be part of the disaster loan, so to speak, if you were eligible for that part. Is that correct?
well, essentially, if you want part of your disaster loan to be forgivable, then you can fold that into the paycheck protection loan. And then
That's
it will,
that's what you're saying. So you guys are just saying it a little differently, but it's still two different
Yeah.
loans. It's not one loan. It's kind of like you have disaster loan and you have paycheck loan. The paycheck loan is forgiven, even if it's treated kind of as one amount. There's still actually two separate technical vehicles there. Is that correct?
right. You don't have to apply for both, but yes, you can apply for both. And if you want to refinance part or all of the disaster loan through the paycheck protection loan, then you can do that if that's what makes sense for you.
Okay, thanks, Jim. I just wanted to get that clarified. And we'll continue to answer that because I think we're hearing this and that on that. And I can tell you that in conversations with people over the weekend, including various bankers, I'm getting different information depending on who I'm talking to. But so we're looking at those as being two separate and distinct loans, even though part of your disaster loan might ultimately be the forgivable paycheck loan. Even if it's like, here's one amount, the technical two loans are separate beasts. All right, Jim, go ahead.
Yeah, there's two separate processes to apply. The disaster loans are still going through the SBA, and the triple P loans are going through financial institutions, and that's being ramped up. And Secretary Mnuchin said the goal is to have it ramped up by Friday, and we'll see where that ends up. But that's the intent, is either Friday or the beginning of next week, that you can go to your bank and they will have a way to apply for the paycheck protection loan and get that dispersed as quickly as possible, possibly the same day. So.
And Jim, we've had people log on and I'm getting some of the same questions we've answered, but I think it's really important that we keep re-answering. So I apologize, but I'm going to go through again. This question is, can I get the grant, the disaster loan, and the paycheck loan? The answer is yes. You apply for the disaster loan. There's a check the box for the grant. That's on our website now. You can, in addition, get the paycheck loan. That's not available till later in the week. And those loans essentially are two different loans. The grant is a tax-free grant that doesn't have to be repaid. The disaster loan is a loan to cover loss of revenue that does have to be repaid, but it is deferred for 6 months. The paycheck loan is a forgivable loan. One of the questions I've had over the weekend is whether that loan forgiveness is a taxable event, and the answer to that is no. Is that good, Jim?
Yeah.
Did I cover that? Okay. I was reiterating that because so one question additional that popped up on the grant is people who are applying last week, there was no box for the $10,000 grant. And the reason for that is the original disaster loan was legislation that was passed. I don't know, everything like time has lost meaning to me right now. But one of the earlier provisions provided for the disaster loans, one of the earliest legislations, the CARES Act, went through on Friday. So those that applied for the disaster loan on Friday or Saturday, the documents weren't updated, but based on Jim's review this morning, they are. So you should go back in with your application. Is there a specific way if somebody applied, Jim, on Friday and that checked the box for the $10,000 grant was not there? Do they need to actually go through a complete reapplication? Or do you know the answer to that question? If not, we can follow up.
The guidance that they said is that they'll give, if you already have applied going back to January 15th, which was when they first opened these up for COVID affected disaster loans, that you can apply for the 10,000, but I don't know the process for doing that yet.
Okay, and so we'll follow up on our website. Another question is from somebody saying, okay, I could potentially I qualify for the grant when I'm applying for the disaster loan, should I apply for a minimal amount in order to qualify for the grant and then just pay the disaster loan? I think you should really figure out what's going to happen to you over 6 months, because this is, you know, we would like to hope to believe, I think they've extended kind of the social distancing thing through the end of April at this point, so the paycheck loan's not going to cover us. I think you should look at, you know, trying to cover yourself for a minimum of 6 months as opposed to just applying for a minimal amount. If you end up not needing the funds, then you repay it sooner. Easy enough, right, Jim? Or do you see that differently?
Right. No, they've waived prepayment fees and all the fees, application fees and placement fees and everything. So, so yeah, there's the risk is, you know, just taking on too much debt, but you're not going to be able to repay. But, you know, they're already talking about possibly, you know, extending the 8 weeks again if the situation is not getting better. So we'll just have to see where things go. But yes, you don't want to take on more obligations than you're going to be able to repay, but you also want to be able to make sure that you're being able to operate the way that you're capable of operating during the crisis. So
and another question that I've had quite a few people ask is that whether they have to have filed their 2019 tax returns and what impact that has on the loans you get. So obviously on the one hand, tax return filings have mostly been extended till, I think it's July, and that applies now to state and gift tax returns as well, which came through last week. So if I have not filed my 19 tax returns yet, does that impact, especially if I've had a big difference in terms of revenue and expenses from 18 to 19?
well, what they're asking
The question
people,
is, should I hurry up and get, if I had a really good year in 2019, let's say you're in a growing business, so, you know, 2019, your revenues were higher than 18, your expenses were higher than 18. So should you get your 2019 return filed? Is it going to be based on the return? Or what I'm hearing you say is you're just being asked for your income and expenses on the return, and you can self-certify it. So you don't really need the tax returns filed. Does that matter?
right. I think at this point, they're not going off the tax return. They're just, at least for the triple P, they're saying, you know, show us what your last 12 months of payroll costs are and average that to the average monthly and multiply by 2.5, and that's the amount you're going to be eligible to borrow from the triple P program. So it's not based on tax return.
So, and this is like slightly, but this is a really good question as well. So can employees, so let's say you're in like the salon industry or any of the businesses that have essentially been shut down, can the employees in those industries get unemployment and get paid through the payroll check program?
They can only get unemployment when they're not getting income from you as the employer or the contractor.
So is
but
the
the
answer for
incentive
that,
is,
go ahead.
the incentive is to rehire people. So if you, during the 8 weeks that you have the triple P loan and you rehire people, you'll get credit for that as payroll counting toward the end of the 8 weeks. So they compare, you know, the beginning of the 8 weeks to the end of the 8 weeks. And if people have been laid off and then rehired, they'll count. They won't penalize you for rehiring them during that 8 week period.
Okay, so let's say that you're the salon and you've been shut down. So you don't actually have anything for most of your people to do. Maybe you can keep your bookkeeper actually has duties.
Mm-hmm.
But if I understand it, if I don't have anything for them to do, I need to send them to unemployment. I can't go take this loan to just pay them when there's no work. Is that correct or not? Can I pay all my people for 8 weeks with a paycheck loan, even though I have nothing for them to do?
Yes.
Oh, you can.
They don't verify whether they're employed, just whether they're on the payroll.
So I could get the paycheck loan. I could pay the salon's rent to make sure that I have a place to come back to. But even if you're paying the rent, a lot of landlords we're hearing are really being great about renegotiating. Hey, they're businesses too, and they need their income as well. But we're seeing some, real amazing renegotiations done in terms of, if those who have tenants are hoping to have tenants at the end of this. So it's been really positive and collaborative negotiations. But so if I go get my 2.5 months under the paycheck loan, can I use it to pay? I can use it to pay rent and other expenses so I can come back, because rent, payroll, and loans are not the only expenses. A lot of people have contracts with IT providers and other vendors to go. So could they use the pay?
Sure.
So so that's, again, you got to think through the best use of these funds to have your business alive at the end of the day. If I'm a owner who has, basically I own a multi-tenant office building in an LLC, there's no employees, but I have mortgage interest. Can I get the disaster loan? I assume I'm not eligible for the payroll loan because my payroll is times 2.5 months is 0. Can I get a paycheck loan of any type for that business?
Yeah, that's one of the questions, and Mike Weaver and I were talking about that before we got on the call. But if you don't have any expenses as payroll cost under the statute, it appears you're eligible to apply, but the way you would calculate the loan is 2.5 months of payroll cost, and that's going to result in 0. So we might need some more guidance, because, the statute does say that if you're completely solo person that, only gets 1099 revenue or whatever, you can apply, but it's not clear exactly how they calculate the amount you're eligible for.
So our current answer is the paycheck loan may be possible if you don't have employees, but we're waiting on further guidance. But you can at least get the disaster loan. And if you apply for the disaster loan and you've had a significant drop in revenues, then you should go ahead and apply for the $10,000 emergency grant. And I would say, to some of the landlords that own space who have a bunch of tenants who can't pay their bills, you probably ought to be doing that. So one other question is, what if you've added an employee or increased in salaries recently, immediately prior to that? I mean, bottom line is you can use 2.5 months of your payroll, correct?
Yes. I mean, if your business grows during the 8 weeks, you're not penalized for that. But they just compare to the end of the 8 weeks, and if your payroll and the other expenses that qualify for forgiveness add up, and that's the amount that the government will forgive at the end of the 8 weeks.
And I want to just go back and re-clarify what is an eligible employee. As I understand it, if you pay somebody and they get a 1099 miscellaneous from you for other, I think it's the other income line, but that can be counted for your 2.5 times payroll.
Yes, that's the intent, is that, wages and benefits and sick leave, unless it's sick leave that's covered by the other tax credit from the previous family's first bill, benefits costs, and independent contractors that are paid, basically as an equivalent of income or as equivalent of wages if they were employees, that's all covered.
And just another question, does the cost of the payroll, let's talk about what that is, include payroll taxes? My understanding is that 2.5 is total payroll cost. So the amount that you pay, which includes the amount you withhold on the employee side, but the employer taxes and any employer benefits. So it's a total amount. What is your actual true cost for payroll for each? Is that correct, Jim?
I'm not sure about the federal taxes. I'm pretty sure state and local taxes but since the federal taxes are going to be deferred and not payable anyway, I'm not sure that they're also covering that under the loan.
So my understanding is that that what you can defer is the 6.2% employer tax, but it was also my understanding, and Jim or Mike pop in on this if you know the answer, that you could not do that deferral if you were applying for this paycheck loan.
Yeah, that's correct, Mary.
So my understanding is if you can't get the deferral, you apply for the full amount. But we can, if we have a doubt about that between us, we'll just clarify that online by way of follow-up. But my understanding was you could apply for the full payroll costs. And then the next question, Jim, is to the extent you take the paycheck loan, do you have to use it for payroll? And that's, the answer is no, I believe. The thing is you calculate the amount of the paycheck loan based on 2.5 times payroll. And then you can use it for any of the expenses that are authorized under that. Is that correct, Jim?
That's correct, and that's a little complicated because there are allowable uses and then there are the forgivable uses. And the allowable uses are broader, and they would include, like Mary said, like paying an IT expense or, you know, debt service on different types of obligations. That's allowable, but it's not forgivable. Only the 4 categories of the payroll cost, rent, most qualified utilities, which includes like electric, heat, or electric, gas, water, phone, internet, etc. And then interest on a mortgage debt. That again, these were all if they were incurred prior to February 15th.
So, and I do have a question on exploring related entities a little more. And I think that is a question that we've had fairly significant discussions internally on and how those apply to all the different laws. So what I think I'm going to do is defer that answer and say we will provide some information online rather than getting into that discussion right now. This is a fairly significant issue and it varies based on the loan, the Leave Act, and which law applies. So we will follow up on that online at our COVID-19 webpage. I do have another question here that says, what happens if you qualify for the paycheck loan, pay some employees for work that's available, and then you have to shut down the business permanently? What will be forgivable? And I think you've talked about that a little bit differently, but as I understand it, Jim, you have to use it for one of the qualified purposes for it to be forgivable. If it's not forgivable, then you do have to repay it. Is that correct?
Yes, and if you, they will look at your employment situation at the end of the 8 weeks. If there are people that you've laid off, then the forgivable amount goes down. So basically there's more added to the principal that has to be repaid if you lay people off or reduce their salary. And this again is a little bit complex. If it's someone who's making less than $100,000 a year and you reduce their income by more than 25%, then they're going to count that as if you have laid them off in terms of the forgivability.
So thanks. And rather than going into this hyper complexities, we're going to like just try and cover as much as we can. So
Yeah.
That's worth some follow-up online. Another question is somebody hired somebody who gave notice to another job. She was going to come to work full-time in April. This might be a question that we bumped to Matt Dunning, but I'll just throw it out in case you and Mike want to answer it. If not, I'll have Matt Dunning follow up on this. He's been answering most of the HR, he and Ryan Sufel, most of the HR related questions. But let's say you made an offer to somebody, they were supposed to come to work as a full-time employee on April 15th. They'd given notice to their other job. What kind of protection can a business give that employee if they're now subject to shutdown or reductions? Can that be included in their payroll? I think that they could be, correct?
Yes, I think they look at your payroll again at the end of the 8 weeks. So if, if you're able to hire that person and pay them, then, that will count as someone who's employed at the end of the 8 weeks. If you have to shut down completely, then you would go into the unemployment area, and there's some, work sharing options under that, where if your people are reduced by between 10 and 60%, you can have the unemployment benefits cover some of that, and you would pay them sort of in that reduced area in sort of a sharing cost situation, and that's something that the government's encouraging people to look at also.
And I'm flipping through our slides that show that. I just want to let everybody know our slides will be available on our COVID-19 website, so www.vwatttys.com. You go there and you can see that on the bottom of the screen now. The slides will be available, a video of this call will be available, and all of our materials will be available, and we'll put follow-up there. And feel free to email us with any questions, and we'll keep trying to incorporate them into our materials. And with that said, Jim, what I'm going to do is I just want to switch to, I really appreciate all the coverage you've been giving. I'm going to kind of flow through your slides just so that we can see some of the other things that are being covered in these various acts, and we will follow up in more details, or we will probably have another webinar in the next couple of days. We wanted to cover the most important issues, and I do want to jump to Mike Weaver to talk about a couple of the important, there's several tax provisions that came through in this one. The one I would like Mike to speak to, because we don't have a lot of time left, is that there's like a net operating loss provision. So when we had the Tax Cuts and Job Act come through here a couple years back, it seems like a lifetime now, we had a rule, one of their revenue raisers was not to allow businesses to carry back losses anymore. And so that law has been changed. And so if you have a net operating loss that you could not carry back, you now can. So if that's a possibility for your business, you can file an amended return and potentially get a refund if that's a possibility. Can you speak to that for us, Mike?
Sure. As you were saying, Mary, the Tax Cuts and Jobs Act did two things to raise revenue. One, it eliminated the ability to carry back net operating losses 2 years. Before TCJA used to be able to carry back 2 years. So they eliminated the ability to do that. And then it also put a cap on the amount of your NOL that could be used. So you can no longer zero out your income. The NOL deduction can't exceed 80% of your taxable income. So what CARES did is it eliminates the 2-year carryback, and in fact it says that for tax years beginning in 2018, 2019, and 2020, you can carry back any NOL for 5 years, and there is no 80% limitation. So you can get 100% use of any NOL carryback to from 2019 or 2020 for 5 years. So if you are in a situation where you have NOLs, you can immediately file an amended return and get a refund of the taxes that you paid based on your inability to take those NOLs in those prior years. So that is a way to get some cash flow back in kind of sooner rather than later.
So, and I'm going to come back to you, Mike. I just had some more questions pop in. I have one question that says, hey, I appreciate what you're doing. We have other business owners that are not current clients of yours. Can I refer them, and can they be eligible for the flat fee COVID-19 consultation for the business? So we're trying to help as many people as we can. We are going to give priority to our current clients who've been with us for all of us, but we have geared up and trained all of our lawyers. We have a full-time accounting staff, some accountants too. We have relationships with some accountants who are dealing with this, and bankers. So the answer to that is yes. We want to help as many people through this as we possibly can. And so that's why, we decided, one, we're doing this webinar, putting materials online so that we can offer those flat fee consultations at a reasonable price. We are kind of finalizing the details of how that works. That consultation will be hey, we want you to look at the materials first so that when we get on the call, we can talk about your business, your exact structure, and efficiently, effectively give you a plan of action for that flat fee. So we'll have details posted yet today on that. So Mike, is there another tax provision that you think is really important for people to know about now? We're gonna obviously follow up in more detail. I just want to talk about the NOL, because if you can amend a return and carry back a net operating loss, then you can get some immediate cash through that way as well. Is there any of those other provisions that they should be thinking about right now?
Well, the only other important thing, so the NOL applies to corporations, but they've also modified the provisions on loss limitations for pass-throughs and sole proprietors so that they can utilize their prior losses or their losses as well. So it's not just corporations, but it does apply to sole proprietors and other pass-through businesses. You know, the other sort of way to get cash is, and this might not apply to a lot of people, but if you were paying an alternative minimum tax before it was before the AMT was repealed by the TCJA for corporations, if you were paying it, if you had AMT credits that you were carrying forward, the TCJA allowed you to carry, basically you could use your unused credits through 2021. If you have those, the new act says that you can basically you can take them now. You don't have to wait until 2021. You can take them all now if that's what you wanted to do. So that's another way to get some cash if that's applicable to you.
So we're going to run out of time, so I'm going to just run a couple more questions here. One thing I'll tell you, I'm not going to have time to cover a part that I do a lot is retirement plans. So you can defer minimum required distributions. You can increase the amount that participants can take out of their plans right now. Detailed coverage of that is online. Jim, can you confirm when you're calculating payroll, does that include owners?
I'm sorry, include what?
So, hey, I own this business. Am I included when I calculate my payroll 2.5 times? Do I get to be covered for my loan? Is the business owner who pays for herself salary, do they get to include their paycheck, or are we not taking care of the business owners?
If you're paying yourself W-2 wages, then yes, that's definitely covered. If I'm not clear yet, we're going to need some maybe additional guidance as to how you handle other income that owners might be getting out of the business.
Right. So if I pay myself salary, that's clear. If I reimburse myself expenses, that's less clear. Okay, what if we have a lot of new businesses, we have a lot of startups. So what if we have a startup, they were in existence, I think you said the date was January 15th, but they were pre-operational, they just hired their first employee. Are they eligible to apply for this loan?
The disaster loan date is January 15th. You have to be in existence. The Paycheck Protection Loan date is February 15th, and you had to be in existence on February 15th. Beyond that, they will look at, you know, what your average payroll was for the PPP loan. So if you weren't paying anybody, then you're not going to have that. For the disaster loan, you have to show an economic impact. So you might be able to show that you were planning on, you know, a cash flow projection that didn't materialize. But yes, as long as you're in existence before those dates for the 2 different programs, you can apply.
Great. And I am hosting this call, and the questions are continuing to pop in, and I have agreed to hop on another call for Omaha business leaders at noon. So we are going to end this. Please, we will follow up with any of the questions we didn't get to on this. Some of them are from my world's favorite accountant. And thanks so much for participating. We will continue to post information. Any of the questions we didn't answer live, we will follow up online. Feel free to email us with further and additional questions, and or schedule one of our consults if you want very specific answers related to your businesses. Thanks for participating, and Thanks, Mike. Thanks, Jim, for being on the call. And again, we will follow up, bwattys.com. Thank you.